Hello, everyone, and welcome back to another episode of Crypto My Money. My name is Joel, and I am joined by Martin. And today's episode will revolve around the fundamentals of investing in crypto assets, cryptocurrencies. I think what's been happening, especially over the past week, is a lesson in by itself. Wouldn't you agree?
Oh yeah, definitely. Uh, the market was crashing and burning 2.5 months ago, and people got scared by the new round of FUD, fear, uncertainty, and doubt. And now we're seeing the market rebounding, and it's rebounding with fury.
It is, especially especially Bitcoin, right? I think it was at a low of like 29,000, and as of today it was like in the low 40s. So that's a pretty big jump in just 1 week. Now, this shows that, again, it's very volatile, but also how really what has been happening previously is just, people have been getting emotional and selling, and now people are, starting to regain some of that confidence.
Yeah, there's a book that I read about the history of bubbles and crashes. And this sort of phenomena has been going on from like the beginning of like what we would consider like modern day trading, like whether it be in the stock market, whether it be in real estate, um, whatever. And now we're seeing the same thing in digital assets. And the thing is that people get very emotional when it comes to money, and as humans, when we perceive loss, we get very, very scared.
Exactly. It's that human fear, right? It's always with us. So it's I guess that the other thing is also, it's a really good lesson on just reminding uh an investor, really, that's investing into crypto, that you just have to stick to the fundamentals, right? If nothing fundamental about the technology itself, about cryptocurrencies, crypto assets has changed at all, um, like you've mentioned before, if the blockchains haven't been hacked, if there's not anything that truly compromises the value that it's promising, then hey, then that's a very good sign that it's just emotions coming into play, just the news. Because if nothing changes, it's still the same. Then and price goes down or up, that's just people acting on their emotions, on their beliefs. So sticking to the fundamentals, especially in a very volatile market like this, is very critical.
Right. I think there are a few conditions that you need to mentally check off before you get into investing. I think this is especially true in digital assets because of the higher volatility. So before you do anything, you need to make sure that whatever money you're putting into the market is money that you're willing to lose and is not going to financially wreck you. You don't want to put in your rent money. If you're doing that, you're already setting yourself up for failure because you need to have a 5 or 10 year time horizon with this, right? So you need to start with money you're willing to lose. You need to have that really long term mentality, and because you have to have that really long time frame, the other condition you need to check off mentally is investing on fundamentals, almost like what you said sometime before, like value investing in a way where you need to look at the assets that are actually doing real world things that are solving real challenges or fulfilling real needs or creating new markets. And this is why a lot of the meme coins are not good investments. We've covered this before. They in the short term they might be good trades, but they're risky and they're speculative. And at that point, you're a trader. You're not so much of an investor, right? We're focused more on long-term investing. So if you satisfy those conditions, then naturally the projects you get into are going to be good projects that long term are going to succeed. So if bad news comes out about Ethereum or Cardano or Bitcoin, one, it's probably fabricated. I think a lot of the FUD was fabricated this time around. But secondly, it doesn't mean the entire market is going to be affected, but because the market perceptions, people start selling and they get scared and prices go down. And when the prices go down, you have to ask yourself, has anything fundamentally changed? Has Bitcoin been hacked? No, it didn't get hacked. Miners got booted out of China, but they they relocated and new companies are popping up that are setting up new mining operations in different countries. So in the long term, it's actually benefiting the Bitcoin network because it's further decentralizing it. So on contraire, all of this FUD is actually going to be really good in the long term.
Exactly. And you touched on this. I think one of the fundamentals too is, just invest in what you know, right? Do your homework. Make
Yeah.
sure you understand it, at least to some extent, right? At least big picture of what could be potential. What are the potentials of each technology? For example, right? Like, Cardano, Ethereum, they have smart contracts capability. So, right there, you based on what you know about the world and how it functions, and you should kind of get some ideas of what could be, some potentials for that and how that can make things better. Which in turn, if should make you, doing your homework and understanding and believing the potential should make you at least somewhat comfortable and at least try to see the trends for yourself, because, there's so much stuff out there. And a lot of that stuff, like you mentioned, is fabricated. A lot of people have positions in specific assets. And of course, they're going to try to say stuff to, make them earn more
Yeah.
money, either go up or go down if they're short sellers. So at the end of the day, no one can predict the future, and you just have to stick with what you believe, with what you're seeing based on your own research, and just sticking with it. Looking at it as
Yep.
a value investment.
Yep. The test for yourself of whether or not you actually believe in the fundamentals of a project is this. If the price crashes like it did, if Bitcoin goes down 50%, as it did back in May, it went down like 45% or something. So let's just say 50%. Bitcoin goes down 50%. If you believe in it fundamentally, then when it goes down, you should have an instant thought in your head, a switch should go off that should tell you this is a sale, buy as much as you can right now. Because at that point, Bitcoin has already proven a ceiling. It's already touched 65,000, 64,000. There's no reason why I can't do it again. So if it crashes 40%, then you already know its potential. You're now getting Bitcoin at a discount. If no fundamental has changed and you're investing in what you know and you're investing in fundamentals, then the real test of whether you're actually investing in fundamentals is you instantly buy the dip.
Exactly, which is hard, right? Easier said than done, but yeah.
It is much easier to say that you're investing in fundamentals than to actually do it.
But this is also a test in of itself, right? Do you believe in this enough to where you're willing to put down money when other people are in doubt? Which, I mean, if you do, if you believe in it, then hey, you should change that emotional fear into opportunity, and,
Yeah.
and go for it.
Yeah, people that I was talking to back in March and April when the market was revving up, um, some of them that I've talked to recently were asking me like, so where are you now? Basically, like post crash, and my answer was like, hey man, I'm great. Like I'm stacking. As soon as it started, as soon as this market started going down, I was buying dips, buy. I bought all the way down and I bought all the way up. Like the last major purchase was just under. It was like at 39,000 that I bought some more Bitcoin, and I used this dip because this dip was actually already close to like my averages on Bitcoin. So it's a price that I'm very comfortable buying at because I know it's a very heavy discount. So I used this dip to stack up and I hit all like basically I hit all my portfolio targets now. And now I'm okay with the market going back up because I had some money on hand and I used some financial wizardry to get my hands on more cash to be able to buy more because I know where this thing is going. I know like in my like I already have this mental picture of what digital assets will be in 10 years. So it would be completely foolish for me not to buy this dip because of the fundamentals and because it is opportunities like this where the bank is made. Now we know that there's a lot of demand for Bitcoin, but also for other digital assets. Mainstream adoption is just right around the corner. Banks, institutions, funds, pension funds, insurance companies, they are just around the corner. And a lot of big players bought this dip. That's what I was looking at. Following the market, I was watching what are the whales doing? What are the big players doing? And the people that hold a lot of Bitcoin, they were accumulating. Retail, people like you and I were selling their coins at a loss. These were people that bought at 50, 60,000. They were selling at 40,000, 35,000, 30,000. And it was the people that have more assets that were very happily buying all those coins, right? So people unloaded, and then it took a couple of months for the market to absorb all that. And I can personally attest to that because yeah, I used those 2.5 months to buy as much as I could, and it took a while, but I was able to fill up my bags, and I was good to go.
Same here. I was trying to buy as much as I could when it was going down. And hey, it was pretty exciting, to get an opportunity to buy at a discount because
Yeah. If you're an actual investor with like looking at this long term, like dude, this was the universe giving you a break, saying like, all right, like here's the window of opportunity again. If you really want to get rich, get on this boat because the next stop is six figures.
exactly. Yeah. I mean, hey, it's going up. You don't know how high it's gonna go if it goes. I mean, the one thing for sure is that it will, and this is what I believe, it will not go back down to below 30,000 anymore. I mean, sure, you have your highs and lows, but the lows are now higher than the previous lows. So it's also something that always keep in mind as well. And yeah, like I said, this was an opening. If you had, if you believed in it and you wanted to put down some serious cash or just get more into it, good
Yeah.
opportunity.
Yep. So in March of last year, when everything crashed as COVID came onto the world consciousness, Bitcoin crashed. I don't know what price it was at. I think it was like 10 or 12,000, and it went down to about 4,000. But that dip was bought real quick, and we never saw that price again. Not even close, because I was buying at around 10,000 is when it started going in heavy. And yeah, we never saw that price again. And we zoomed past the previous all-time high of about 20,000. And we shot up all the way to over 60,000. And then we came sliding back down the high 20s. I think at some point it was like 28,000 for a wick. It was real quick. It was like I don't think it was even an hour. So the high 20s, like around 29,000, that seems to be the new floor. And I don't know that we're going to see anything lower than that. Not unless uh, COVID, I don't know, like we get another variant that is worse than the Delta and markets crash. And yes, it is a possibility for it to go closer. But yeah, barring any black swan event, I think Bitcoin has proven this floor, and from here it's just up.
Yeah, definitely.
You know what's
Definitely.
crazy? Like it's so easy to lose sight of things. Like these last couple of months, they were kind of boring. I was like, kind of mad. Like, okay, yeah, I'm buying yada yada, but it was pretty boring. But then I started thinking, wait, not even a year ago, I was buying at 10, 11, 12,000 dollars. Like, I like it's all a matter of perspective. Just as the market is very emotional, the market is very forgetful, and we forget that not too long ago, 20,000 wasn't even a thing.
Exactly. And things move pretty fast as well. I mean, look just what happened in the span of like week, 2 weeks. Like they happen fast as well. So it's like if you see an opportunity, you also have to act fast. Because I mean things move pretty fast, and I, I definitely agree there. Things the way things are going, either it's going to go up or down, and it's like trying to find. Well, the other thing too, it's hard to know. What is the dip, right? At what point would you consider a dip? I mean, I consider it when the price is lower than my average, my portfolio. So it's like anytime it's lower than the average of what I've history have purchased it at, that's when I start buying more. Now that average is different for everyone, right?
Right.
I guess curious on how you would define a dip.
I guess, yeah, my definition of dip isn't as set as yours is. I look at the market and um, it's different per asset, right? So like for Bitcoin, under 40,000 is a great price for me. So if the price is over 40,000 and then it goes down, then I'm willing to put more in and dip into the cash reserves. Uh, with something like Voyager, which is my highly speculative asset, then yes, I do look at it as if it's under my average, then it's a dip. If it's like 20% below my average, then yeah, like go crazy. And I'm not buying anymore because I already actually surpassed my target position with that. But that's how I was playing it. Like I said, I used the CoinGecko app and I set up an alert and I set a price. And
Mm,
like if it goes under this price, I'm buying. You know, just buying every single day if it was under that price.
nice, right on, man. Well, definitely not dipping into your mortgage cash fund though, right?
No, definitely not. No, I dipped into my savings, but basically the strategy that I created was like, okay, I'm going to put this money in, take it out of my savings. But once Bitcoin clears 40K, or once I hit my target for my target position, then basically I'll go back to putting in the majority of my new money into savings because it is very important to have a savings. So now that the price has gone up and I'm happy with my positions, now I've switched back to a stance where I'm accumulating cash. One for savings, emergency savings, and that kind of thing. But then also because I feel like these next 2 years are going to be uncertain and the market feels like it's wobbling. There's a lot of talk about inflation and there's also just shortages and unrest. So I have a feeling that the market might crash at some point. I don't know when. It could be next year, it could be in 5 years. But when the market does crash, I want to have ample cash so that whatever I'm watching as it crashes, I want to buy the dip. So that's what I'm working on now. Now that my portfolio is fat and happy, I'll also dollar cost average into Bitcoin, but it'll be a lot less now, and I'll primarily be focused on building up my cash and being patient. A lot like if you're an investor, like most of what you do as an investor is educate yourself, right? So you spend a lot of time doing research and reading and learning about new things, but then also really just patient. You just have to sit and just wait until the market condition is favorable. I read a book called Richer, Wiser, Happier that talks about this. The author profiled a lot of big time investors, really, really successful investors. And he talked about how some of these investors, they would go like 2 or 3 years and not do anything. Like they would just have a certain part of their portfolio in cash, highly liquid, waiting for a market crash or waiting for some condition in the market to be favorable. So yeah, if you don't see market opportunity and things seem overpriced or there's just nothing really going on, then stack up cash, load up on that cash because at some point something is going to change and you'll be able to deploy that cash. And the dips is when you experience massive discount on assets, and that is how you get rich because the dips are caused by panic, right? It's an emotional response to the market.
Mm,
So it doesn't mean that the fundamentals are broken. It just means that the market is being emotional. If the fundamentals haven't changed and there's a massive crash in an asset, you go in, you buy it, you don't have to wait for it very long, and you're going to profit massively.
exactly, which would become like equivalent of, investing in the stock market and the general stock market of like, like back in 2008 when the market crashed, right? Like a lot of those companies, the price of their stock went down by a lot, like Amazon, Google. And I think that's a pretty good example of like what we're saying as well, right? Of like, hey, you got to think about the company, about the asset. Has it fundamentally changed? Back then in 2008, did Google, Amazon, did the product, what they provided really change? Just because the price went down by a lot? And you think back and it's like, no, it didn't. I mean, the only thing that really affected it was the overall economy sentiment,
Yeah.
because after that, they just blew up.
Yeah.
Uh,
And when you're investing, you have to be willing. to watch your portfolio do a roller coaster, right? You have to write it up, but then you have to be willing to write it down, even if it's crashing 50, 60, 70, 80%. And you have to have the fortitude to let it crash and let it go back up. Because if you invest in fundamentals, it will go back up. But like in May, in a span of like a week or 2 weeks, I watched like almost 60% of my crypto portfolio go bye-bye. And now it's recovered maybe like 50% of that crash already. And things are just getting started, it seems, on this new leg of the bull run. So you have to be patient. You have to have that fortitude, and it's easier to do that if you have heeded the advice of only investing what you're willing to lose, right? Because all this like this digital asset portfolio of mine, and same thing with you. Like if you lose that money emotionally, it's going to suck, right? It's going to be painful, but it's not your mortgage money. It's not your car loan money. Like life is going to go on. You'll be financially battered, but you're not going to be financially destroyed.
Exactly. Yeah. So I mean, you definitely don't want to put all of your eggs in one basket either, right?
Right.
But you want to take enough risk to where, hey, if things pay off, then you could be much better off than if you wouldn't have taken that risk. Because I mean that's what investments is, right? Is you're taking risk, and in return for that risk, you're gonna get rewarded.
Exactly.
Sticking to your fundamentals, and to kind of summarize what we went over is, you just got to stick to those fundamentals and be patient, really. I mean, do your homework, understand what you're getting into, understand the possibilities, the potentials, and be ready to buy the dips when they occur, because that those those opportunities don't happen very often, and when they do happen, the window for you to execute on that is very short.
Yeah, and if you're prepared, they are massive blessings. You have to take advantage of them, and that starts with having us cash reserves so that you can move quick when an opportunity opens up.
Exactly. And with that, we'll end this episode. Be sure to hit like, subscribe, and please comment if you have any questions, or would like us to talk about anything more in depth or anything in specific.
And with that, yeah, we'll leave it at be patient and buy dips.